morning, good afternoon, good evening, my friends. Welcome. Wednesday morning here, SpartanTrading.com. Welcome to those of you who are joining us on our live YouTube stream. Interesting things to talk about, right? We had that blow-off extension on the semis. For me, it's all about finding out, what kind of pullback we had. We had some interesting data. Yesterday, I mentioned how important the Dallas manufacturing was. This is actually pretty stunning, okay? And we'll go over that in a little bit more detail, why it's so important in terms of not so much the present, but the future. The more and more this contracts, the more I think potential, right? We could be talking about a recession in next year, but it's way too soon to talk about that because there's other components that are so much stronger. But manufacturing is still the driving force on a lot of things we do, right? Out of Australia, this is kind of my bellwether in terms of the Asia Pacific Rim. So we had a little bit better, but this is the one that we have to keep an eye on. So commodity super cycles are just crazy sticky. You can get times where it rotates through and you get these huge declines in terms of commodity prices. And then all of a sudden, within a short period of time, those prices rebound. It's like elasticity. There is no question that we are in a commodity super cycle. Commodity super cycles, by definition, have to last a minimum of 5 years and tend to last 8 to 10 years. So if, let's say, we're in year 3, right? We're not even halfway done. But like I say, it's a helix. You can see it rotating through, and then we'll see how things play out down the road. Clearly, the softness out of China in terms of industrial metals is important because everybody thought here we were with China that they were coming out of the doldrums, and yet here we see the economic data is just really bad. So that leads us to this. Manufacturing PMI softer than expected, non-manufacturing PMI softer than expected, and general PMI softer than expected. Now, this is what they're reporting to us. So you can imagine that there's probably a worse than what they're telling us. Now, let's take a look at out of Germany. I mean, all the different, provinces with the, regions in terms of CPI and stuff like that. So North Rhine, better. So a lot of these are better. Unemployment persons is as expected, change 9,000. So stronger, right? Employment rate as expected, right? And then we have here these numbers all coming out. CPI, you can see they are better than the previous. Okay, Bavaria, Saxony, right? All better than the previous. Okay, we did have an auction. And then so we have the 30-year mortgage. Look at that, 6.91%. Wow. Okay. What does that tell me? Well, the drill here. The spread between the 30-year and the 30-year MBA mortgage back, okay, is extending and getting worse. And you know what I say about that. If the government's going to interject itself, there's places that it can be meaningful and impactful. Okay. And some of this bullshit that goes on, it just drives me crazy. And I'm an equal opportunity basher. Everyone's to blame on this stuff. Okay. Politicians are politicians, but somewhere along the line, do your job and help we the people. Instead of making America great again, help we the people, sort of thing. This is bullshit. Now, did anyone see that Chris Christie is throwing his hat in the ring? Right? We'll see how that plays out. Here we have inflation rates better than expected. As you can see here, inflation's coming in quite a bit. India, a lot of stuff coming out of India. And this is one that I really want to. Growth is better than expected, right? GDP growth, third estimate, better than expected. Infrastructure, a little bit softer than expected. Okay. Let's see what we got. All right, so this afternoon, right? Seriously, fun. So this afternoon, Thursday, going to be really a lot of fun for us. not so much in the morning, but in the afternoon, Broadcom, Zscaler, Lululemon, MongoDB, et cetera, et cetera, et cetera. What do we got here? So this is really fascinating, okay? So lowered guidance, everything like that, just really ugly in that sector, right? Okay, what do we got? They're at it again, more buying of Oxy. Including yesterday. So clearly under $60, it's a buy for them, right? Oh shit. Okay. All right, that's fine. You can deal with it. AI, crazy town call buying, right? AI fueled surge in NVIDIA's market value. Yeah. All right, so there was it was kind of interesting, says that DigiTimes also reported that there's a shortage in terms of some of the NVIDIA chips, because they basically have been giving it to like Amazon, stuff like that. So I find that really fascinating, okay, that they're targeting who gets their chips, and now there's a shortage. Well, what could go wrong with that? For NVIDIA, not a whole hell of a lot. Now, Costco, this is kind of interesting as well. So at Costco and Amazon are doing the same thing. They're having these pop-up sales all the time now for inventory, to get rid of inventory. And I think it's being successful. So anyways, is it a coincidence that confrontations are escalating as countries sidestep the US dollar? Many people think it's just by chance. Ask yourself, what backs the dollar? Right, breaking news. The United States accuses Chinese fighter jet of aggressive maneuver. Decline the U.S. request for a meeting between defense chiefs. What? Come on, whatever. Okay, let's do it. All right. See what breaking market has to say. German CPI may preliminary report out. Yeah. CPI, we know. German CPI, yeah. Okay. Not a good look, right? Quantitative easing is coming, okay? Last time we had quantitative easing, the Chinese stocks rallied. It's coming. I don't know when it's coming, but believe me, it's coming, okay? And you know what that does to stocks. See what else our gal has to say here. Treasury, non-commercial, damn. Macau hotel occupancy, wow. Not a good look. Cheap as chips. Okay, so here's the drill on that one. Right? Okay, what do we got? All right, let's talk about the Dallas Fed. Why is it so important? Okay, that's not the one I want. This is the one. No. Damn it. I deleted it. There we go. Okay, let's talk. This is why. So next to California, Texas is the largest manufacturing state. This is a big deal when you have that kind of contraction. Big deal. California is number one, Texas. So when you get these numbers out of the San Fran Fed and out of the Dallas Fed, these are meaningful, impactful in terms of manufacturing in the United States. Because Ohio, I'm not even close, okay, in Illinois, et cetera, et cetera. These are why you have to pay attention to some of this stuff, right? U.S. house price index purchase. This is all, let's take it. Here's our buddy, S&P 500. As you can see, this is why I love the dude, is because he's not doing this day-to-day hourly stuff that Avi does, which I'll show you what he came up with. Anyways, so basically he's looking for the blow-off top by October. And he's looking for a deflationary bust coming in. I think that's pretty cool, right? All right, let's take a peek here. This is money markets, all right? So you see yourself, okay, what the hell's going on here? We know that we have a record amount of money in money markets, but what we didn't know, and this is why I love to do what I do, is because literally, for the most part, this has been sticky, staying up here since COVID. We had a slight pullback, but then we're piling back in. So what does this tell us? There's a ton of cash on the sidelines. Joyfully, gleefully, I don't know, but it's there, right? Just saying. Let's see what the stupidest people in the room are doing right now, which is these instant bondholders, right? Finally. So now they're saying, well, maybe not. Okay. So anyways, they're still looking for a 50 basis point cut into January. But they're looking for a 25 basis point hike in June. So that'd be a 75 basis point cut. All right, let's talk about it. This is what Avi Gilbert has to say. Okay, so this is what I don't like about him. Well, in general. He's talking out of both sides of his mouth. We could be going here in the fifth wave, or we could be going down here. So we know we're in a market pivot. We know this. Look, Spartan's going to tell us when it's time to hedge, right? I told you yesterday I took a lot of profits on my USD equity. I bought puts on USD and I increased my SOX because on a risk reward basis, this was kind of like crazy town sort of thing. But I don't know. Anyways, if we hold here, then we're going here. If we break, then we're going down here. Whatever. June is not a good month for them. It's sloppy choppy, don't forget. That's horrible. Continues tour in China. Debt ceiling deal. I can't imagine it not being raised. We know about Oxy, GE Healthcare to join in. Ooh, nice. Slips below 70. Yeah. Look, this is why. If you learn nothing from me, you always have ratio hedges on to offset stuff. If you've learned nothing from me, especially on the commodity side. So now you see like this Boyle KOLD. Well, KOLD is now 2 times that of Boyle, okay? And I'll probably start trimming the KOLD, right? SCO, right? My SCO is absolutely positively ripping and offsetting with hedges against the, damn it, they didn't film me. My oil side, okay, more than offsetting it. Now, oil, we have to wait, doesn't really start taking off until June. And I know Smackagogo was asking me, we have to wait. Like copper, these are industrial metals looked at asset, or what, I don't know, groups he's adjusted. So that came out, earnings preview, right? Okay, what do we got? All right, so, okay. Let's talk. Yeah, but we have this technology out there called AI, right? That can increase efficiency like dramatically, right? So, you don't need bodies if you've got computers, do you? Saying that, the lack of efficiency on the government is just, I don't know, we need a young president who understands where we are in the world, okay, in terms of the revolution, industrial revolution, and applying it in terms of all parts of government, okay? Why do you need these, like, I got a stupid letter saying that I have to call the IRS because, just to confirm I paid my taxes. So like that. Anyways, debt ceiling deal could mean harmful impacts for poor people. Yeah, I understand that. Look, but it's the lesser of the evils. It's the lesser of the evils. The 2 evils, right? You get a debt downgrade, girl. It's ugly fugly. Okay, I understand this construct. Okay, I do. But, and I don't, look, people who can work, there are jobs available. I agree with this. Now, anyways, I don't want that, but my McCarthy debt limit could reduce spending by $1.5 trillion over the decade. So that's basically, what they were saying, right? A little bit more, right? Okay, what else we got? Let's see, debt ceiling, yeah, debt markets are showing signs of strain under rising interest. It's not so much that, it's basically the rebalancing of the yield curve right now going on, okay? And once again, we're seeing the inversion really aggressively taking hold, and that's horrible for banks, right? Especially regional banks, right? Ukraine and its allies are planning a peace summit without, okay. U.S. will soon be part of the world's top oil benchmark. Yeah, U.S. manufacturers are seeking out alternatives to China as tensions rise. Yeah, exciting until it's doing itself. What do we got? Balance. Look, this is going to get, there's enough moderate Democrats who will get this through, right? Anyways. I don't know. Like I say, we're entering a sloppy, choppy month, right? And as a result of that, the tailwinds that we had, and it was just like a gift that kept on giving in terms of these delta trades. Now we have to be, and Spartan mentioned it, and I mentioned it yesterday, it's more like speed dating now. You can't assume you're going to have these all-day runners. You just can't right now. So it's like a Lotto Friday every day now, because you really do have, like I say, I'm taking profits at 30% now instead of 50 to 100%. Okay, so I just think you have to understand that market is misery piling up. We know this to be true. HP, Apple to invest in India. Okay, so let's talk about Apple right now, because they have their thing coming out, and we know it's going to be virtual reality. So I was talking to someone who actually is very well informed in terms of what's going to happen. And basically, just like with the Apple Watch, they're coming out with a physical product, and they're letting people basically tell us where it can go. So it's open source. So then these really bright minds can start saying, okay, this is the usage and what we can see it doing, and they're going to make it open source. Now, I asked about AI as well, and she said, yes, they will be discussing AI, but irregardless, okay, we'll see how this plays out. But her take was, you look at it like the Apple Watch, how they brought that out and how they let all these, and kept it open, and then let the market dictate where it goes, okay, in terms of apps and everything like that, right? Software, you name it. So we'll see. No, we've heard that this virtual reality thing that got coming out, all of these who have tested it say it's actually fantabulous. So I don't know. I still think Apple is what we want to look at, right? So we'll go from there. Elon Musk, yeah. Can you believe this? So on these international flights, you gotta get weighed. Okay. Wow. I don't care what happens to her. All right, let's talk. So this article came out. I thought this was interesting, that the Chinese scientists had a new gene editing tool that differs, okay, than the CRISPR. So for all of you science peeps out there, this is kind of an interesting read if you want to take a look at it. Okay, so it's fascinating, and I don't know where we go with this, but I think this is like I say, this is what we see right now on all fronts, is like the Industrial Revolution. We see it on the medical side, we're seeing it on the tech side. I just think that this is fantastic stuff, right? Anyways, that's what I think right now. Okay. So, all right, let's take a look here. So this and this offsets, right? Tesla, 14.9 million. There really wasn't as much of an offset. I want to see Apple start to pick up. It's very, very soft still. So I'm looking at Apple as my go-to for my next run on the FANG side. Okay. Okay. So just be aware of that. All right. Benzinga. Insiders. What do we got? INVA, 6.2 million from March 10th to May 30th. I mean, I don't know how that means. Anyways, insider recent, March, yeah, that doesn't help us. UID, March 26th. Yeah, not a lot of money going through. Okay, so then we got here. So this is sell, right? So this is a robust one. Apollo Management, Global Management. Joshua, taking profits, right? Anyways. And then you got to pay yourself, right? And then we see here this POWI, profit taking, yada, yada. All right, so let's see what's going on. So we don't have a lot in terms of upgrades, meaningful upgrades stuff. So what I did was I said, okay, well, let's just look at today and let's see what's coming out. So MDB, MongoDB, okay, Beard, outperform, but a little bit lower. So we're at the price tag. Amazon, this is kind of interesting from Bernstein, 85% stud. Ambarella, right? From Needham, 82% from buy to buy, but raise the price target, outperform. NVIDIA, B of A, 82%, 24% upside from 450 to 500. VLN from buy, but 112%, but price target from 6 to 5. Anyways, you can see here Microsoft, 20% higher, Piper Sandler, 74% stud. Also out with MNDY, another raise there to overweight. Okay. And then we have HP, B of A, 73% underperform. Interesting, right? Constellations, this has been getting a lot of hits lately. A studette in our presence right now, 73% studette, XLY, HPE, NVT, Sovo, and that rounds that out. And then you can see here we have some 69%ers, right? So we got a lot of upside pops going on right now today. Okay. So I kind of thought that was interesting. All right, what do we got? What do we got? Next here is back in the May to July. Okay, so we're starting to get into some seasonality strength. Okay. So what does that mean to me? Okay. There are two that that I want to be buying, right? One of them is PXD, and the other one is NEAT. Those are the two I want to buy right now in terms of overweight. Waste management, I haven't seen this in a while, 100%, going back 34 years, as well as Charles River Labs. God, haven't heard that name in a long time, right? So we're starting to get some new stuff coming in right now, okay? So Wingstop, Amazon is now on the list, middle of June to July. Fortinet, I love Fortinet. Going back 13 years, United Healthcare is still on this. Apple, end of June into August. Okay, so keep an eye on this. So we're starting to see some broadening. All right, so let's take a look at FANG. What have we got going on here for June? Amazon, Apple, and Microsoft are strong months. Netflix and Google, not so much. And don't forget, I don't have Meta up here because I don't know why they're not. Well, I guess we could have put it on Facebook, but I don't know why they're not. See, it's a problem. Nothing I can do about that. But in order to alleviate that, let's take a peek here. All right. Let's take a peek, going back 11 years. What do we got? Down and then up. All right, so softness into the middle of June, then it starts to pop and drop. 100% statistical probability from mid-June to there. Okay. And the decline, potential decline we're seeing in Meta till middle of June is 2.5%. And then the upside is 12%. Okay, there you go. All right, let's take a peek. Okay, so this is the problem with these long dated models. They miss so much. All right, let's take a peek. All right, so after TCTM long-term trend model buy signal, this goes back to 1932, so this is not for the faint of heart. So you can see here, 3 months, 6 months out, 80%, etc. Okay. All right. I don't know. Like I say, all right. So S&P after a financial relative strength, low count, risk off financial, not good. So watch the financial markets. Okay. After New York Stock Exchange new low presented by the 200-day moving average risk off signal. I don't know. Okay. Big tech stocks. All right, so let's take a look at this in terms of the, we ad nauseum, how many times can we talk about this in terms of, targeted tech, narrow breath, anyways. So it's been a rough few months for the average, right? As opposed, if you're not in these things, then SOL, right? But if you can see here, we do have a setting up right now, we're 100% for the next 2 weeks, 1 month out, 100%, 3.3%, and then you go out 6 months out, 4.8. But this is just not a good look. Okay. Now, if you look at it this way, in 3 months, then you can see here 6 months, 12 months, that looks better, right? In here, you can see here 12 months out, right? So the Reader's Digest version is we already had the move, and we're probably gonna be a little bit sloppy choppy, and it was a gift, and if you're chasing, good luck with that. That's the Reader's Digest version on that one. All right, let's take a look at corporate insiders. Okay, so this is the selling, right? And as you can see here, okay, it had, and now it's abating now. And here you have the insiders, right? This is insider buys. Well, now this is a divergence. And the reason why I say this is a divergence is normally when you get this, okay, you get up to here, right? Now, I'm not saying it's not going to happen, but the only way this happens, obviously, is if we may start to push in terms of the market breakout. Now, this is the ratio, buy-sell ratio on corporate insiders. You can see how this is playing out right now. So, once again, the only way this happens, you know the drill, right, is if we get a breakout on the upside. I mean, it's just obvious, right? All right, let's look at the heat map, 30-year, FXI, So this is getting close here on a bounce side, just so you know. And I would not be surprised within the next couple of weeks, you heard it from me, that they come out with some sort of aggressive quantitative easing statements, et cetera, et cetera, et cetera. Okay, so this is what it looks like. Obviously, the Qs are in the 80%. Cattle, cocoa, sugar, XLY, as what you would expect. Egypt, XLK, SMH. See, this is why, got to know your extensions here. I mean, it's all about risk reward. When you're in this upper quadrant, I mean, you got to be a little bit careful, right? All right, breath, the story of the tape, okay? This is rarefied stuff. This only happens, you can count it on 1 or 2 hands going back to the early 1900s, this breath. But eventually, all boats rise, okay? And it starts to broaden out, right? I don't know how, when, or whatever. So the XLK is the only one that's got this rosy stuff going on, obviously, and that's, tech, right? And the biggest holdings are Apple and Microsoft, right? So And you can see here 4-week high, but regardless, you still don't have, because it's targeted. When you have the top 5, this is why I'll be honest with you, and I continue to float this construct. Look, these indices are broken because of their weightings. Okay, when you have so few, right, as a percentage of the whole, right, it's crazy. XLK, Amazon, I'm sorry, Apple, Microsoft is like 40%. It's crazy. SPY, QQQs, it's too, the weighting is just ridiculous at this point in time. All right, let's take a look what we got going on here. So this is the problem, right? Right. We got yesterday, it was inverting. Today, it's steepening. It's whack-a-mole time. This is unprecedented for the last 2 years. We have never, ever, ever, ever seen this kind of volatility on the interest rate side on a day-to-day basis. Ever. Okay. And this is big money being made, big money being lost. Okay. This is unprecedented. And I guess this is the new norm, right? Is that what we're talking about here? I guess so. Canada rates down overseas across the board. Germany, they had those good numbers, right? In terms of inflation coming down, right? And then you have Asia Pacific Rim as well. So everybody's got, nothing's green right now in terms of interest rates, right? So let's take a peek here. So this is the GDP stuff, and we'll keep an eye on this, all right? So we know that the GDP is still coming down, okay? And this is what it looks like, right? This is the PCE trim, right? Fed funds. This is the recession probability, and it's nothing, no blip, zilch, okay? Right? Productivity. We got to keep an eye, continue to keep an eye on productivity, because that's the offset for a lot of stuff, right? CRE. Let's take a peek. I don't know why this happens, but anyways, keep an eye on this. This is really stunning. It's inability. So it actually needs another month. Okay. So we'll see what happens. So this is next month. We'll see. This should, okay, allow it to be inside the Bollinger for June. Irregardless, okay, this is still a bear flag, no matter how you slice and dice it. So we'll see how that plays out. Here's the 2.5. Well, okay, there you go. Let's see if it holds. This would also be unprecedented. I got nothing. I'm going back to 1989 on this one. I got nothing. All right, here's a 3-month, 10-year. Okay, failure to reclaim this extension that goes all the way back here to 2012. Now, when it comes to this, it's an 8-month cycle predicated that for the recession. So this is another indicator. This actually is saying September. Now, if we look at the 14-month, that gets us to March in terms of a potential recession. So keep an eye on that. All right, here's that illustrious 210. Wow. This is crazy. Up and down 58% move in 1 month. It's crazy town. Still within the quadrant. All right, here we go. This is the 530. From the bottom here, March, 200%. And then now we're down 76%. It's like crazy. I don't know what to tell you on this one. Isn't that crazy? We got as low as this. If you want to play, you're going to pay. Do you realize how much this is on trillions of dollars? Are you seriously? I mean, I'm serious. It's a lot of money. 10-year. This is yield. Okay, look. This is the weekly. I don't know about you, but that looks like a W to me. But, you know, I don't know. The reason why I say this is because I'm not afraid to say I don't know. Okay, but the reality is this downtrend did hold. Okay, and then we'll see what happens on this uptrend line, right? So when we have unprecedented times, we have unprecedented moves. And I have literally no idea, okay, how this plays out. None. Zilch. No idea. Okay? None. And anybody who tells you they know what's going to happen, they're lying. So here's the 3010, which is actually doing a really good job. Okay. This one also you can see, so this also gets us to February. So we have a couple indicators on the inversion that tells us that potentially we could be seeing this sort of movement in a recession in the beginning of 2024. I don't know, whatever. All right, here's US China. All right, you can see the CQQQ looking ugly fugly. Okay, quantitative easing is coming in China aggressively. I'm telling you right now. Because the foreign direct investments are saying, hey, what the hell? That's what they're saying. What the hell? Here's Germany, yields are staying fine. All right, here's the US dollar. I don't think we get much higher though. I mean, on a risk reward basis, I just don't think that. Now, this is the problem here. When you want to attract foreign direct investments, you don't weaken your currency. All right, so this is a problem. This is a conundrum we have going on here. Okay, so just within this month, they weakened their currency 3%. Cryptos, there you go. Next. All right, let's see what's going on here, friends. All right, so we have gold up slightly, silver up slightly, aluminum, and then we have live cattle, hogs, feeder cattle, lumber. The lumber continues to go up, okay? So I would say this is probably 65%, maybe 70% down, 35% up. Okay, what do we got? DBA. All right, still holding, okay, it's at reversion to the mean, still holding a 10 EMA, which is 2039. That's 2044. Okay, so here we are here. This is breaking down, notable, next leg down coming. All right, so these are the industrial metals and stuff like that. Okay, so with the DBA, the basically, you know the drill. I really can't do anything. Let's look at this on a weekly so you can see this, okay? So I need this to hold last week's low, and then I need a green candle for the next week, okay? Natty gas. We nailed it, sold here, small amount left. KOLD is outperforming right now. Perfect. Let's see what happens down here. Okay, and then if this holds, then we can curl up and start the next leg up. So what does that mean? I'm going to start putting stops, okay, on my KOLD, right, to exit the offset on the boil. Okay, so that's what that looks like. Okay. All right, let's talk about crude. All right, so what do we got? So this is the weekly. It's pretty straightforward, right? Failure to reclaim the 10 EMA and the weekly. I love this 10 EMA, friends. This thing is golden. The success on this is like 95%. Okay. I mean, it's really, really high. Okay, on the weekly. And that's my go-to. Okay. So you can see here, let's see what happens down here, round tripper. I don't know. Let's take a look at it on the monthly. Okay. And this is what got me into the SCO. Seriously, friends. Right? The failure and then basically breaking down. And it also had right there the 200 EMA in the weekly as well. Okay. And that SCO that I'm in, okay, is now up almost 15% in a matter of a week. Just saying. Seriously. Anyways. Okay. So let's take a look at gold crude. So gold is actually, this is why with these spreads, you have to do both sides. Okay. I'm just saying you have to do both sides. Look at that. LL is really taking off today. I'm in this LL. Okay, let's do it. All right. All right. And here we have gold still holding okay. So we've got this 1965 pivot thing going on right now, and it's held, and that's really impressive. Okay, that's why I'm starting to lighten up on my hedging. Right, and I told Nancy yesterday I had bought some, I got filled last week on some GLD 2025 stuff. All right, so the market's down, VIX is up a little bit. I told you yesterday, what was I doing? I increased my VIX, UVXY, I increased my SOX, I took profit on USD, and I increased FNGD. That's what I said to everybody yesterday.
All righty, Beth, ready to pop on whenever here.
Okay, let's do it.
Thank you so much, guys. Morning. What is up? What's going on? Let me just pop the screen share up here. We'll get going right away. There we go. Alrighty, so if you guys are new to chat and already done so, make sure to click on the Discord link that's emailed to you. You're gonna pop in chat. It's gonna look something a little bit like this. First area to go to when you guys do come in, click on that disclaimer section, give it a read, as well as go to the new to chat information section and scroll to the very top. Top of the section, you can see a link to the disclaimer, and right below it, this bolded risk reward section. Super important to understand both, guys. In regards to risk reward, you know, most important ratio in trading, in my opinion, obviously from a mathematical standpoint, if you know what risk reward is, it's extremely important as well for profitability. So it's definitely worth going through this section, understanding how it works. I do give you all the tools to understand how it works here. So you got video explaining how risk reward works here. Risk reward profiles on top, which you can use to match your account size as well as your, you know, if you're trading equity or options. And then you have a risk reward calculator, which you can actually just download and use on the go as you are trading, which, you know, certainly does help you calculate risk reward extremely fast. Continue to scroll down. You have summary of how this chat works, breaks down all the channels work on the left-hand side, so you can properly navigate the chat throughout the day. Important in order to be looking. Continue to scroll down. We have the how to read alerts on the options and equity side, breaking down how to read alerts on both sides. Pretty straightforward in that regard. Continue to scroll down. We have the Spartan options rules that we like to use Monday to Thursday in regards to controlling risk, scaling in, scaling out, trading different price contracts, etc., etc. For those options ideas. SPX rules right below that for the SPX ideas. Continue to scroll down with anyone with a small account less than 10K, breaking down if you do have a smaller account less than 10K, here's some rules, information, discipline you can put in place so you can better manage that account. How to pick ideas from an options or equity perspective below that. And then last but not least, high conviction small account trades posted in that area and they do make sense, typically to a credit spread every single day in that spot. All right, pre-market tickers on watch. What do we got going on today? Tesla, O'Reilly, CAR, AAP, AMBA, and MRKR. Tesla gapping down slightly with the market. I should say in sympathy. I don't know why I kind of jumbled the letters together, but O'Reilly down in sympathy with AAP. CAR upgraded to buy from hold at Deutsche Bank. Target $263. AAP down on worse than expected earnings. They guided their 2023 fiscal down. So bad guidance there. Ambarella reported upbeat earnings for its first quarter, but issued weak second quarter guidance. So get a guide down as well, gapping down on that. And then MRKR announced preclinical data for one of its specific T-cell products candidate. Let's take a look at these names from a technical perspective intraday. So the first two we're going to be looking at today, guys, going to be the Tesla and the second one, O'Reilly. Tesla and O'Reilly. Let's have a look. Let's move these two things out of the way here. There we go. All righty. Tesla and O'Reilly. I don't know why it went so high on Tesla, but figured I'll just label those anyways. So Tesla, guys, obviously slight pullback, nothing too crazy though. It's actually done a really good job of holding up. A little bit of a flag pattern on the hourly there. Pivot to the upside today is going to be 201.59. Levels able to hold 205.13, 208.07. Unable to hold, we look for a pullback towards 196.12 to 191.70. On the downside, I'm leaning bullish, looking for a continuation push higher today if that pivot point is able to be reclaimed. So I'll be watching that level out the gate this morning. See if we can get it back above it. If we can, you know, get a little bit of a push higher there. I think it's worth probably drawing that little downtrend as well. just from last day. Keep an eye on that, as well as you have this head and shoulders level on the hourly there, which is going to act as a little bit of I guess support right now, as a range support. So keep an eye on that. Oops, let's just correct this a little bit. There you go. It's kind of acting as support as well, that downtrend. All right, let's take a look at this O'Reilly here. All right, 896.96 pivot to the upside today. Levels able to hold 905.78, 913.19, unable to hold 890.97, 883.91 on the downside. Overall, going to be leaning on the bearish side today, bearish neutral side today, if the pivot point is unable to hold. So that's Tesla. That is O'Reilly. All right, let's take a look at car and AAP. Sorry, guys. Car's range has been pretty terrible lately. Let's see if that can change today. Okay. All right, pivot to the upside today, guys. It's going to be this level right here. 171.97, level holds 173.93, 177.60, unable to hold 170.26, 168 on the downside. Overall, going to be leaning bullish, looking for a continuation push higher. Been consolidating off the lows for quite some time now, looking for that range break and continuation higher. AAP, let's take a look at this. All right. Pivot to the downside today, 83.21, unable to hold. We got room towards 78.82, which is where it's at pretty much. 71.46 below this, above that, 90.88. And then into the 95.58 level on the upside. Overall, going to be leaning on the AAP, bearish, neutral, looking for continuation lower at the pivot points, unable to hold. That's AAP, that is car. All right, let's take a look at Ambarella and Merker. All right, Ambarella gapping down a little bit, 65.20. Let's work through this chart. It's coming off that recent run that it did have, obviously. Smack a little bit from there. All right, 66.70 pivot to the downside today. Level's able to hold 69.20. That level's able to break 72.29, unable to hold 64.24 to 62.17 in my opinion. Maybe leading bearish neutral, looking for continuation lower if the pivot point is unable to hold. I think this looks like a grinder to the downside for now. Let's take a look at Mercer and Merc AR. So a couple different resistance levels to the upside. I don't think we need to go above that, actually. That's probably okay. Should suffice. All right, so pivot to the upside today going to be this level right here, the 20, I guess 179. That level holds 203 to 224. Unable to hold 160, 141 downside leading bullish neutral. Looking for a grind higher on this name today. All right, that's Mercer, and that is Amberella. Let's rip through the spine, the fang. Spine, the fang, my friends. All right, let's see what the market's doing today. $419.20 pivot to the upside today. Level holds 421.75 to 423. Unable to hold. We're looking for a pullback into the 417.49 to 415. 97 on the downside. Overall in the market, I am going to be leaning in the bullish neutral side. Now that this gap is filled on the daily, I do think we can bounce back up. We'll see how it acts. We're also coming into this little uptrend area from before. I'm not sure if you guys have seen this. Oops. I guess we did break it. So we'll see whether or not the uptrend can be reclaimed if that pivot point is reclaimed. If not, then I think we're going to come in, obviously probably down towards that 416 level. We'll see what happens right now. Actually, I'll be leading bearish neutral at the gate unless the pivot's reclaimed. How about that? Makes a little bit more sense. Bearish neutral unless pivot reclaimed. So stays below that 419 level. It's paid off a little bit more. Let's take a look at the rest of the thing here. I'm going to do this. I'm going to flip this over to a daily so we can kind of see the overall big picture here. Let's get rid of all this crap. So Apple was a little extended to the upside yesterday as well. We talked about that, or we talked about that with the SPY. 417 476.86 pivot level holds 479.69, unable to hold 473.89 on the downside. Gap fill area is around 475.22. Let's label that. Going to be leading bearish neutral today out the gate on Apple, looking for a pullback into that gap fill area, and then we'll see what's what. It's actually doing a pretty good job. Has a decent amount of relative strength this morning. It's holding up okay, but we'll see how it holds up after the morning open. It did have some relative strength yesterday in regards to its staying power with the market pulling back. I thought that was kind of impressive too. Take a look at Amazon. So Amazon, yes, I guess slightly extended, but I would say this is still bullish. Pivot to the upside, 122.63 levels able to hold, 125.20 unable to hold, 118.72 leaning bullish, looking for a continuation push to the upside today. That's Amazon. Let's take a look at Netflix. Netflix definitely extended to the upside. Oh, most of these big caps are. 394.90 pivot level holds 406.89, unable to hold 383 385.77 to 376.64. Going to be leaning on the bearish neutral side today, looking for continuation lower. Netflix, let's take a look at Meta.
close my door.
All righty, guys, Meta. Should be good here. All right. Let's take a look at the signature day. So slightly extended to the upside as well today. So there's some gaps to be filled actually. Pivot to the downside is going to be 262 to 19 levels able to hold 266.29 to 268.66, 268.66 unable to hold 258.55 and then 253.14 going to be leading bearish out the gate looking for continuation lower if that pivot point's unable to hold. So that's going to be Meta. Let's take a look at the last but not least Google. Oops, get rid of that. Sorry, guys. All righty. So last but not least, Google here. All right, pivot to the downside today, 122.71. Levels able to hold 125.64, unable to hold 120.3. I'm actually leaning more on the bullish side. No gap to fill. Still bullish consolidation on the day. I do like the chart, obviously. It's one of my favorite AI plays. So we'll see how it acts today, but I think if it holds the pivot, we should be able to push back up to the top end range. That's Google. All right, so that's the spots of Fang. Those are the individual names that we're looking at today, guys. Going to go ahead and pass it over to South Beach while I type up that pre-market action plan, and I will talk to you shortly. South Beach, if you're ready, she's all yours, my friend. He'll pop on in just a second, guys. I'm sure he's there.
I do the same thing every day, Spartan. I talk and I don't click the button. Sorry, guys. Anyway, I'm looking at the S&P like I always do, right? And it got through the 50-week, which to me is a major hurdle. But it has to get through for 2 Mondays in a row to confirm. So we have a lot of EMA support on the daily. Chart is amazing. And on the weekly, if it could bust through this area 2 successive Mondays, then we're in business there as well. When I look at the Qs, they're in better shape. We know that, right? That completely busted through. So technically the market looks really good, even though it's coming in a little bit today. A lot of that has to do with the fact that these things are market cap weighted, but that's a whole different can of worms. All right, moving to the bond market, we see yields slightly lower this morning, nothing really major. Okay, the 10 years down 0.02 to 367. It hit like 380 last week or just shy of that. So it's down a little bit after a nice run up. And the short end of the curve, it hasn't really moved. I mean, the 6 month is down at 0.01. The 1 year is down 0.04, 520. Still a big move, you know, recently to much higher levels. And we'll see how it goes from here. But basically, rates coming in a little bit, but nothing major. And the spread between the 2 and the 10 is about 0.75. So if we look at the range of being half and 1 over the course of the last, 6 months or so, we're right smack in the middle. All right, rates in London are down a little bit. I think recession fears over in Europe for sure after Germany said they're in a recession. And so we have lower rates in Germany as well. London's 10-year, Britain's 10-year is 418 and Germany's is 229. So rates by and large a little lower this morning on recession fears for the most part. Okay, so that's that. We look at let's look at what's going on in the commodity market. We've had this oil, you know, continue down. So it broke 80 and it's been a, you know, basically a one-way street since then, right? We're looking at 67. What's OPEC going to do? Do they cut some more? Whatever. We'll see. Natural gas really, you know, doesn't really move at all. I mean, barely. It's not even, it hasn't even moved a penny according to this today, 0.07 cents. Gold's up on dollar strength. Copper's been in a bad way for a while. And when I went through these agricultural commodities this morning, I was surprised, I knew they were weak, but I didn't realize how weak. Okay, like wheat has completely broken down. Okay, new low there. Corn is on their lows, not quite the lows, but near the lows. And these soy things, all the soy derivatives broke down, every single one of them. So soybeans broke down, soy oil broke down, soy meal broke down. I mean, what's that telling you guys? Coffee's trading, down this morning. Rice, which I like to talk about because, it really feeds most of the world, has gotten crushed in the last, week or two. It's gone from 18.5 to 14.73. That is just a gigantic move. I mean, like, what is that? 4 over 18, do the math. It's a lot. It's just, these cottons on the lows, it's telling you that the GDP growth is really hard to come by. And that's why the stocks that are doing well are the stocks that don't need it. And the stocks that are doing poorly are the ones that do. I mean, that's in a nutshell. All right. So the dollar, we have strength in the dollar this morning. It's up against the North American currencies. It's up against the yen. It's all the way up to 710 on the against the renminbi, which is flirting with its highs, or actually is the high for since October of 22. Okay, the euro's back down to 106 handle, the pound's down to a 123 handle. So a lot of dollar strength. Crypto, you know what crypto is? It's a reflection on the dollar, right? Dollar down, dollar up, crypto down. So we got Bitcoin down 3%. We got Ethereum down a little north of 2%, and Solana's north of 3%. And looking at the foreign markets, kind of sort of quiet. FTSE's down 0.2, DAX is 0.5%, and in Asia, they had a little damage over there. Nikkei's down 1.5%. Hong Kong, which is slipping into a bear market today, down 20% from the highs, is down almost 2%, and China down almost 1%. Okay, Taiwan down just a little bit, 0.25%. So that's the backdrop. So you got the banks and the Fed, right? You got 5 Fed governors speaking today. And you've got this unemployment number coming out Friday, which should kind of solidify which way the Fed's going to go. Right now, the odds, 0 is 34%, and a 0.25 point hike is 65%. That's how, that's the odds at the moment. Okay, so you have the banks and the Fed, 5 guys, like I said. China will get to, Russia will get to, oil we just discussed. Definitely a lot of weakness. Now, we did see that Buffett bought another, almost 5 million shares of Oxy last night. So this is his level, every time the stock gets down to this level, he seems to pick up another 5 million shares, right? So he's a believer for sure, right? And that's that, right? So that's oil. Crypto, we discussed. Mr. Market yesterday. Not the most active day for sure. We had the Dow was down a little bit. SPYs were basically unchanged. It was kind of a NASDAQ kind of day. But even there, group rotation was a little spastic. The only clear moves we had, big oil and gas was a little softer. HMOs were soft. Hospitals were soft. And consumer non-durables were soft. Now, if we see weakness in these high PE tech, semis, those kinds of names, FANG and whatnot, you're going to see people put money back into the safety trades. So you're going to see drugs rally. You're going to see consumer non-durables rally. You may even see utilities rally. Okay, we know that the airlines had some decent news today. So maybe some strength there. But if you see weakness in these, extended stocks, slightly extended, then people will probably move to the ones that are making the new low list. And if I look at that every day, I told you guys, that's a big factor of mine. And you look at the new high, low list, new highs is littered with tech, Apple, Marvell, Microsoft, Nevada, AI, Palantir, so on and so forth, AMAT, Salesforce, etc., Netflix. You got the the new low list is mostly consumer non-durables, drugs, stuff like that. Target, BTI, AR, Big, AA. You know the cast of characters. So anyway, what's working? Well, certainly, stocks that don't need GDP growth are working. That's for sure. And semis are working in a big way. And the stocks that have been crappy continue to be crappy. That's working too. Just short the new low list every day, and that's been working. So that's what's working. Now, we had Lawrence Summers speak today. He used to be ex-Treasury Secretary. He's the big mucky muck at Harvard now. He says U.S. inflation will stay high, rates will stay high in the short run, but he thinks taxes are going higher in the long run. Okay, so if you raise taxes, you reduce consumer spending, and this is a consumer-driven economy, so you know what that's going to do to GDP growth, right? Right in the tank. So, that's what he's thinking anyway. Debt deal is moving nicely. They should have a vote in the House today, and I don't know, it probably signed by probably the end of the week, maybe sooner, who knows, but I don't think there's much doubt that this thing's getting passed at this point. All right. UK's consumer confidence fell 5 points, worried about stubborn inflation there. They have the high inflation, they have no real energy and whatnot. And it's kind of sort of a mess over there at the moment. What else do we have? Turkey's GDP growth is slowing. The only reason I talk about Turkey is there's a lot of people in Turkey, okay? So, it's really I think Istanbul has something like 21 million people. It's gigantic. So anyway, their GDP growth is slowing. China, what do we have here? Oh, Canada's GDP was below expectations, 0 versus expectations of 0.2. So there again, another country, GDP is below expectations. And I guess that's the norm these days, right? Goldman firing more people. This time it's going to include managing directors and partners. This is the third tranche of layoffs they've had this year. Okay, Meta, we have the annual meeting today. So I got a little insight from watching McHaney on TV. Mahaney, I think he's at RBC or something like that. Anyway, he was saying that one thing we need to listen for is he would like them to cut spending on the metaverse. Currently, they're spending $4 billion. He'd like them to cut it in half. And he thinks the stock's incredibly cheap at 14 times. So the same guys who told you to sell the stock at 80 are telling you to back up the truck at 260. So you want to have no money? Listen to these guys. American Airlines raised guidance from 120, 140 to 145, 165. They increased their margins from 11 to 13 to 12.5 to 14.5. And you can tell the airlines are all up on that news. Okay. Hong Kong stocks were down 3%. I told you they fell into a bear market. North Korea tried to launch a spy satellite there first. That didn't work out so well. It plunged into the sea. And that's North Korea. China, factory activity. Okay, so it came in 48.8, which is contraction, right? 50 is the magic number. So, as we've known, right, the Chinese economy has been kind of stalled out. And these numbers just bore that out. Okay, the stocks act like crap. And now we see the economy slowing down. All right. What else we have here? Australia, they're having problems with housing, another situation there. And moving on to Russia. So some drones hit oil refinery, only 50 miles away from their Black Sea port where they do all their exporting. So now Ukraine denies sending any of these drones. Okay, so they said they're happy about it, but they're not sending any of the drones. I just wonder if it's Russia doing it to themselves to try to ramp up the kind of weapons they use. I certainly wouldn't put it past them. And since no one is taking responsibility, that's my inclination, that they kind of did it to themselves. But don't put anything past these guys, okay? EU wants NATO to give Ukraine security guarantees. I think that would be a huge mistake, but that's what they're saying. Russia's Medvedev is calling Britain Russia's eternal enemy for supporting Ukraine the way it has. Jamie Dimon is in China this morning. He's talking about dialogue and all kinds of stuff that the US and China really haven't had for a while, and it's dangerous for the two superpowers not to speak. He's probably right about that. Musk is also there. He's got 40% of his business is inside of China. So I think they represent, like, he makes 25% of the cars there, and he sells 40% of his vehicles there. So huge market for him, and he needs to make nice. All right. Then there was an incident in the South China Sea yesterday where a US jet was over it, and there was the US is complaining that there was aggressive maneuvers by a Chinese fighter. So what China did is they put these islands in South China Sea, and there's a rule like you can't be 8 miles from land, and they're claiming these man-made islands are land, so they put them throughout the South China Sea. So they're claiming that no one's allowed in the South China Sea except themselves, and the US isn't abiding by that. So a little bit of a situation there. What else do we have? Musk, mortgage demand lowest in 3 months. Rates are hit 7%. AI leaders are warning about AI. You have to take sight of the risk and all this other stuff. And that's more of the same. But it seems like everybody wants to beat everybody else to the race for AI. So there's no governors on new rollouts. Retailers are warning on the rise of retail shrink or theft, is however you want to call it, but that's what it is. And you see that is Target up today? Yeah, I think Bud was down again on this crappy sales because of the another 1.5 because of the boycott or whatever. So that's what that. Anyway, earnings wise, we had the AAL, which was good, right? We had SoFi is up. They really are, their businesses has a lot of student loans out there. And so when they stopped paying student loans, the stock got hit. Now they're starting up again. So the stock is rebounding a little bit. And that's the reason for the recent strength in SoFi. Gabilo has an activist, Legion Partners. I'm not that familiar with these guys, but the stock was up on it. Is it still? Yeah, it's up $1.50 on this news. LL got a unsolicited bid of $5.76 a share. Stock is up on that $1. TRVN received a milestone payment. MRKR is up on preclinical data, and tech. Glencore is mulling a higher bid for the company, and that stock is up on that TECK. Okay, short side, we have AAP, which is one of the bigger misses I've ever seen, actually. 72 cents versus 256. All right, they say they're going to make 6 to 650 for the year versus 1062. Their revenues are slightly below expectations, so it's a margin thing, 11.2 to 11.3 versus 11.4, which isn't so bad. They cut their dividend by like 75%, effectively a complete bust. MU is down and AMD on insider selling. Orly and AutoZone are down in sympathy with AAP. Bumble had a president resign. LTRX CEO resigned. And Puke, PUK, CFO resigns. I'm out of time, so I'm going to leave it at that. And Spartan, it's all yours.
Thank you, South Beach guys. Morning. What's up? What's going on? Let's take a look at what we got going on today. A couple different things. If you guys are new to chat and already done so, make sure to click on that Discord link that's emailed to you. You're going to pop into the chat. It's going to look something a little bit like this. First area to go to when you guys do come in, click on that disclaimer section, give it a read, as well as go to the new to chat information section, scroll to the very, very top. Top of this section, you got a link to the disclaimer as well as this bolded risk reward section. Super important to understand both in regards to risk reward, guys. Most important ratio in trading in regards to profitability, in my opinion. Definitely worth checking out. You got in that section videos explaining how risk reward works. You got tools so you can actually calculate risk reward on the go, and then also have these risk reward profiles which you can use as a a quick cheat sheet while you're calculating a risk reward. Continue to scroll down. We have summary of how this chat works, breaks down all these channels work on the left-hand side. So you'll probably navigate the chat throughout the day. That's important to know where to be looking. Continue to scroll down. We have how to read alerts on the options and equity side, breaking down how to read alerts on both sides. Pretty straightforward in that regard. Continue to scroll down. Spartan options rules that we like to use Monday to Thursday in regards to controlling risk, scaling in, scaling out, trading different price contracts for all the options ideas right there. SPX rules used every single day for the SPX ideas. Anyone with a small account less than 10K, now that's just my opinion, but this could potentially help you hear some information. How to pick ideas from an options or rec perspective, probably the second most important thing in trading, which is building your own criteria, overlaying your own criteria on top of ideas that you're seeing that is specific to you and your account, and then basically only taking things that do make sense. And then lastly, high conviction small account trades posted in the high conviction small account trade area when it does make sense. All right, pre-market tickers on watch. Let's take a look what we got going on today, guys. A couple different things. Tesla, O'Reilly, CAR, AAP, Ambarella, MRKR. Tesla gapping down slightly in sympathy with the market. O'Reilly down in sympathy with AAP. CAR upgraded to buy from hold at Deutsche Bank, target 263. AAP down on worse than expected earnings. Fiscal 2023 guide lower. Ambarella reported upbeat earnings for its first quarter, but issued a weak second quarter forecast, gapping down on that. Then Merck Therapeutics announced preclinical data for its multi-TAA specific T-cell product candidate, gapping up on that. Let's take a look at these names from a technical perspective intraday. So first two we're looking at today, guys, Tesla and O'Reilly. Let's rip through those charts. All right, Tesla, guys. Ooh. We didn't freeze. I'll leave it for a second. Oh. Yeah, I think it did freeze, guys, but that's okay. I can pop it up the actual screenshot, which is what I take. All right, Tesla 201.59, pivot to the upside today, level holds. We do have room for continuation to the 205.40 area, unable to hold, able to hold 208.07, unable to hold 196.12, 191.70, leaning bullish. We're looking for a continuation push to the upside today if that pivot point's able to hold. O'Reilly 896.96 downside pivot level, unable to hold 890.97 to 883.91, able to hold 905.78, 913.16 on the downside. Going to be leaning on the bearish neutral side today. Looking for continuation lower. Let me just do this, guys. Go to picture. So I think this is going to be frozen. Yeah. Fortunately, it did not stay up, but that's okay. Still does the correct. AAP 171.87 pivot level holds. Oh, sorry, CAR 171.87 pivot to the upside today. Level holds 173.93 to 177.60. Unable to hold 170.26, 167.99 on the downside. Leaning bullish neutral there. Looking for a continuation push higher. AAP 83.21 pivot downside 78.82 to 71.46 downside supports. Able to hold 90.88 to 95.58 on the upside. Going to be leaning bearish on that. Looking for continuation lower if the pivot is unable to be reclaimed out the gate this morning. Let's take a look at Ambarella Mercer. 66.70 pivot, unable to hold 64.24, 62.17 on Ambarella, able to hold 69.20, 72.29 on the upside, leaning on the bearish neutral side there. MRKR 179 pivot level holds 203, 224 Unable to hold 160 to 141 on the downside. SPY. So what do we got here? So SPY still a little extended to the upside on the daily, but it should be filling that gap, or the gap will be filled on the open, I should say. So final kind of little touches there. Pivot 419.20. This level's unable to hold. 417.49 to 415.97, able to hold 421.75, 423.04 on the upside, going to be leaning on the bearish neutral side unless that pivot gets reclaimed today. So that's going to be a big level for this SPY to deal with out the gate this morning. Apple 176.86 pivot level holds 179.69 to the 170. Actually, let me just take a look at that level is. Looks like 180.1890 area. Unable to hold 175.23 to 173.89 on the downside. You're going to be leaning on the bearish neutral side if the pivot's unable to hold. Amazon 122.63 pivot level holds 122.50 or 125.20 to 125.20. Unable to hold 118.72. Going to be leaning bullish neutral on the Amazon. Netflix 394.90 pivot to the upside today. Unable to hold 385.77 to 376.64. Able to hold 406.89. Now this is extended to the upside, so I think it needs to pull back a little bit. So I'm leaning bearish neutral on that one. Meta 282.19 pivot level holds 266.29, 268.866. Unable to hold 258.55, 253.14 downside, leaning on the bearish neutral side there as well. Google 122.71 level holds 125.64. Unable to hold 120.03 on the downside. Going to be leaning on the bullish neutral side on that name as well. VIX 1773 pivot level holds 1813, 1865, unable to hold 1703, 1631 downside. Not leaning any particular direction, but using it for direction on the market as per usual. QQQs 350.45 pivot levels unable to hold 346.49, 341.40, able to hold 355.45, 358.56. Leaning bearish neutral at the gate. I think you need to fill this gap as well on the Qs, and then we can look to see what happens there. SPX 4204.72 pivot level holds 4213, 4230, unable to hold 4193, 4178 on the downside. And yeah, I'm going to be leaning on the bearish neutral side unless that pivot point is reclaimed. So that's a SPY. That is the FANG. Those are the individual names that we're looking at today, guys. If you joined us this morning on the YouTube pre-market stream, thanks for popping in. We do this every single Wednesday. You got any questions, feel free to reach out. SpartanTrading.com. And that's it, my